Hello and welcome to the November 2010 Analyst briefing from Ian Henry, looking at the European car and light commercial vehicle production outlook produced on behalf of the SMMT. Looking at the economic background, we can see that the economic and financial recovery is generally back on track, although there is a lot of worry at the moment about what's happening in Ireland and to an extent still in Greece, Portugal and Spain. The fear of a double-dip recession remains, although its likelihood has been much reduced. This has been as a result of the actions taken in recent months by the EU finance ministers, the ECB and the IMF, which appear to have stabilised the situation. But here in the UK, we've got the VAT rise coming in early 2011, and there have been cuts in government spending in France and elsewhere, which are undoubtedly going to hit consumer confidence in a major way. The scrappage schemes across Europe, which boosted 2009 and early 2010 sales, have all finished, and especially in Germany we've seen a major fall in sales, and this has been reflected in a decline in general across the market in H2. Turning to our perennial problem of overcapacity, we still see this as a serious problem, but again we have to report that the vehicle manufacturers have been reluctant and remain reluctant to take the politically sensitive decisions and close plants. They prefer to cut shifts and line speeds and move production of vehicles between their plants. We don't really see much sign of this changing, and indeed many plants have been reprieved. 2 plants are closing, GM's Antwerp and Fiat's one on Sicily, Termini in Maresi. However, elsewhere difficult decisions have been avoided or delayed. Jaguar Land Rover in fact has recently decided not to close a UK plant. GM is still indeed looking for a solution to its Luton van plant, and we hope for good news in that regard before the end of the year. Renault's Spanish plants, which had been vulnerable, have received new models. Looking at the production outlook in general, the recovery in production started in Q1 after a big fall in 2009. This has continued through the year. And this production increase has been underpinned by improvements in the vehicle manufacturers' finances, particularly those of the German and the French vehicle companies, and also their extensive new model programs. And despite the downturn in the market, when one looks at the production volumes, which are also driven by exports of course, we've seen new models from BMW, for example, the 5 Series and the X1, Ford, Opel, VW, Audi across its range, Nissan with the Duke and the continued good sales of the Qashqai, and models from Hyundai, all doing much better than expected. Market volumes by 2013 will be back above what they were in 2007. And despite the decline in the market, in sales terms, 2010 production will indeed still be up on 2009. We see 2010 at around 18.35 million, which is over 2.25 million up on the figure for 2009. There will be a small recovery again into 2011, but the real climb in production we expect will be once the recession is fully over and the problems in Ireland, Greece and elsewhere have been resolved, and this will be from 2012 onwards. Let's turn now to the vehicle manufacturers and what's happening there. Looking at BMW and Daimler first of all. At BMW, we've seen the first 10-month sales of this company up nearly 13% and achieving its best ever result in October. It's still on target to meet tough financial goals by 2012, and it's in the middle of a powerful new model program, which will also see a move to small cars and electric vehicles. And it's also expanding production outside Germany, but there's not going to be any reduction in production within Germany. Daimler too has reported extremely strong financials so far in 2010, with a €4 billion profit expected this year versus a loss last year. And its Q3 earnings before interest and tax, EBIT, was up almost 25% year on year. Here too there's a gradual reorientation taking place towards small cars, and at the heart of this is a cross-shareholding joint venture with Renault. Looking at some of the volume manufacturers, Fiat, Ford and GM, well of course at Fiat, one of the major things that's been happening there is the increasing integration with Chrysler and its ambitious model and platform sharing programs. It's got some problems on the horizon, with negotiations with the unions about the move of production from Poland to Italy still taking place. And Fiat has also got an ambitious plan to move into the States, with its new MPV range in particular destined for that market. Ford has now completed the sale of all its non-Ford brands in Europe, with Volvo having been sold to Geely earlier in the year, and its focus is now on the core business, especially the Fiesta, the Focus model and the Transit van. And it's also, with regard to the Transit van, confirmed extensive investment in the Turkey factory to expand production there. Looking at GM, well, the parent company is now going it alone, without European government funding, and it seems to be doing well. And its US parent is about to launch an IPO, launching shares on the stock market, symbolising a return to financial health. In terms of Opel's manufacturing operations, it's expanding in Poland, it's investing more in Germany and in Hungary, especially in engine production. The one question mark we have to again repeat is the uncertainty regarding Luton, but we do expect good news here by the end of the year. Turning to the French now, we can report that both PSA and Renault have repaid their government loans early, and they have both reported strong financials. At PSA, the cooperation with Mitsubishi on electric vehicles is deepening, and there will be Mitsubishi technology employed at Vigo, where electric versions of PSA vans will be made. PSA is also going to cooperate more with BMW in the joint development of hybrid systems, and the premium Citroën brand, the DS, will be widened. At Renault, in addition to strong financials, the main news concerns the joint venture with Daimler, or rather the lack of news yet. We're still waiting for details on the mid-term plan for Renault, which is expected later this year. Turning to Tata, Jaguar Land Rover, Toyota and VW. The main news from Tata has been the decision not to close a UK plant, and this has been on the back of strong recent Land Rover sales. The new model program at Land Rover is underway, the first of which has seen the Range Rover Evoque launched at the Paris Motor Show. The company will move production to India and China in the coming years. At Toyota, the main problems of the year have been the recall problems which have affected the company globally. But on a more positive front, production of the Auris hybrid has started in the UK, and the hybrid Yaris will start production in France next year. A second Russian plant is now a distinct possibility. At Volkswagen, there have been record sales in the year to date to September, with over 5 million vehicles sold worldwide across the group. The first time this has happened. Asia Pacific sales are up over 40% in the year to date, and this symbolises the new direction for the company. The Volkswagen, Audi and Skoda brands are all profitable and have become increasingly so in recent times. But Seat and Bentley are still loss-making. Seat has been given 5 years to turn itself around. The full merger with Porsche has been delayed for legal reasons. Turning to our overview, we see 2010 volumes increasing, boosted by new models. In particular, we're more optimistic than we were previously earlier in the year, and we think that exports and the switch to smaller cars at many vehicle manufacturers will continue to underpin some volume growth. The overcapacity issue is still not being addressed, decisions have been delayed, and maybe the car companies have found a way of avoiding the problem entirely. In conclusion, for the vehicle manufacturers, BMW and Daimler are switching their focus to small cars and adding electric vehicles. Daimler has formed its joint venture with Renault, details of which remain to be confirmed. Fiat is cutting jobs and bringing production back from Poland into Italy. Ford has sold Volvo, focusing on its core brand and growing production in Romania and Turkey. GM is adding shift and has reinforced its commitment to Bochum, Ellesmere-Port, Gliwice, Eisenach and Zaragoza. PSA is growing its EV business increasingly with Mitsubishi and is following Renault in this regard. Both PSA and Renault have repaid the government loans early and reporting excellent financials in recent months. Toyota still faces much uncertainty following the recall crisis, but it has started hybrid production and this will grow. Volkswagen is still performing strongly, but it has to address the Seat losses issue. But its global growth will give it time to deal with this problem in a significant way. The core Volkswagen brand is very profitable, as are Audi and Skoda. The Chinese vehicle manufacturers will be in full production in Turkey, Bulgaria and possibly Poland by 2015. Change is coming, and this will be reported on in the next report in 2011. The full European car and LCV production outlook report is available from the SMMT website, details of which are now on the screen. Thank you for listening. Speak to you next year.